Hello, it's Wednesday, October 18th, 2006. This is Brian Shannon speaking from Alpha Trends. And on the screen right now, I've got the semiconductor holders, SMH. And this is, to me, the most disturbing area of the market. We started seeing a little bit of weakness 2 days ago, underperformance rather, 2 days ago. Yesterday, the profit taking was a little bit deeper in the semis than any other group. And today, they got hit pretty hard. We're still above the rising 50-day moving average, so that makes me cautiously optimistic. However, it's starting to look like, we have the potential here for a failed move, a failed breakout past that 200-day moving average. Now, we've got the 50-day moving average and this trend line, but I thought it was going to be very important to hold above that 200-day moving average, in particular on a weekly time frame. Now, it being Wednesday and we've got options expiration on Friday, I think it's going to take a lot to get this group back up above that 200-day moving average, and that really is going to make things, to me, make me a little bit more cautious going forward. If we look at a intraday time frame, the 10-minute time frame here, you can see if you looked at the blog earlier in the day, I was saying perhaps we're going to find a little bit of support near that 50-day moving average. The 50-day moving average again is right down here at about 33.65. And I'd also pointed out, based on the 10-minute time frame, what's known as the measured move, taking the high right up here of 35.95 down to this low here of 34.65. The height of this is about $1.30. If we subtract that $1.30 from this high right here of 35.08, that would have given us a target of 33.78. Today's low was about 33.83 or so. Now, I don't think that, we're out of the woods by any means because it hit that target and we're near this 50-day moving average. But if we get a feeble bounce out of this and then a breakdown through the more important levels of support near 33, 33 and a half, 33, 33 and a quarter really, breaking below there anytime, probably not, I don't think it's going to happen this week, but if it happens next week, look out below and get extremely defensive because as we've been noting, this market is extremely overbought. The S&Ps did finish higher today, if my chart would pull up, but significantly lower than where they opened. This market is getting more extended by the day, and here on the 10-minute time frame, we can see the volatility in here as well. Once again, that was a 5-day moving average that acted as support. The more times any support level, be it a trend line, just regular support, or a moving average, the more times it's tested, the more likely it is to fail to hold up the market. So, looking below this level right here, about 136 and a quarter, below that level, I think we could see a deeper pullback that might bring us down towards these levels in here initially, 135 or so. It's hard to call the end by any means because we're clearly in a great uptrend still, but looking at the mid-cap stocks, MDY on the screen right now, these stocks continue to hold up well. They've experienced their breakout, and now they're just getting a normal pullback. The weekly time frame still looks very good here. It got extended last week. Now it's consolidating. So this group looks a little bit healthier until you look at the 10-minute time frame. What you start to see here is a developing pattern of lower highs and lower lows. So that puts us very cautious. Now, the last couple of days, there's been a lot of stocks that are just going ballistic, and they're these really low-priced stocks, and that's a sign that there's a lot more speculation in this market, and when the speculation gets that aggressive like it is now, it typically comes as people are chasing stocks because all the good stuff has already gone, so they're chasing these little garbage stocks that we've been making money in. Not that the money doesn't spend great, it does, but just be aware of where we are within the cycle of which stocks are moving and what groups are outperforming. The Nasdaq 100 pulled down to its rising 10-day moving average. Looking at a 10-minute time frame, you can see we've got also in here lower highs and lower lows. So that makes us very cautious in the near term here. 41.20, I think, continues to be the likely level that we're going to come down to and then probably search for some support in that area.